All right, let's bring on board Sandeep Sarwal, Peter McGuire. We are in conversation with our technical experts, both Kunal and Naresh, as to how should one now approach today's gap down. It is going to be in gap down start. It is going to be in sharpish start, which will start impacting markets and which will start impacting markets in a very the sentiment now, in a sense, is getting roiled. Let me put it this way. Sandeep, what is the best strategy for an short term and a medium term trader stroke investor?
I think short-term and medium-term investors should stay out of the market because volatility is going to be very, very high. So you will see swings on both sides and very aggressive swings over the next few days as news flow changes every day. So I think that's the best strategy. For longer-term investors, now there are people who are fully invested. So to that extent, they really can't do anything. I can't say that they should dump their equities and increase cash at this stage. For people who have cash, I think we'll still get better levels because of the fact that it is now that most people are starting to recognize risk. Till around mid of February, investors are still pouring money into global equity funds. It is now that some sort of redemptions have started. And I think once they start, they last a few weeks and then ETF selling comes in, which tends to be indiscriminate in the sense that they are not bothered about the valuations of the market, etc. And for India specifically, it's sort of a perfect storm because the government has not increased fuel prices since crude prices were $75, and today they are $125. What strategy do they have? How does it impact the fiscal if they cut taxes? How does the free market in fuel prices actually work? So I think there are stability issues around there also, combined with the fact that the monetary policy committee has not recognized the inflationary risks at all. So I think there are various macro and micro factors, so it's best to stay out and wait.
Peter, good morning. 130 on the crude. It turned from 140 last time in 2008 2009. Are we likely to reverse anytime soon? Because I was looking at numbers. What Russia adds every day, more than 70-80% of that could be mended, provided there is a resolution in place with Venezuela and Iran.
I think there is just so much to build on from your other guests' comments. I mean, these are very unusual times. So we're up $10 in the last matter of hours. We had a peak there of 139, now at 129. Where does it go from here? Has it got the potential to carry a 150? You've got some of the banks, the big analysts are saying you could see a 175, 185. So there's a lot of fear premium built in. There's a lot of risk. There's a lot of bullishness. It's parabolic. These are very dangerous times for a lot of traders. The fortune favors the brave that look at opportunity. And if you've been long over the last couple of weeks, it's been an almighty ride to the upside. And there's a lot of people saying that, with Putin and the way things are with Russia and Ukraine, that this is only going to increase volatility further and push prices up further from here, and demonstrated with US dollar index 99 and gold at 2000.
Peter McGuire, I think, a lot of answers would be now what central banks do next. And I guess that's going to also somewhere dictate the next market move at a global level. Wanted to understand from you whether or not you sense that the Fed is going to move away from its dot plot and perhaps kick the can down the road because, they too are grappling with the repercussions of Ukraine and Russia situation.
I think absolutely. And I think a number of points. First off, you've got inflation sitting in the States 7.2, 7.4%. You've got the euro read this week. And everyone was, I think, hemorrhaged from $100 crude. Certainly when it hit 100, the mood had changed. That you could nearly inhale that as far as central banks, because they realised from an inflation standpoint what happens. Now we're sitting at 130. We were at 140 a couple of hours ago. We hit a 139 handle. And where are we tomorrow? So I think any central banker would be saying, let's just maybe kick the can down the road. Well, we may have moved a little bit early in March. They've got to be conscious of two things. First off is, what's growth going to be like? And secondly, if you start raising rates, you don't want to come back and say, oh, hang on a second, we've got to now cut rates, because inflation and possibilities of stagflation, that's the real concern with very high energy costs. And if this is going to run for a number of weeks, if not months, if that's where Mr. Putin takes it, then it's going to be a very difficult situation to manage from any consumer or central banker or investor.